gotta have my macchiato. Good morning, everybody. Welcome to QuantBox Live. It's time to get your macro on and uncover the best fundamental investment opportunities across the global markets. My name is Wayne McDonald. I am the founder of QuantBox. I also have a macroeconomics degree from Harvard. I have a master's degree in financial management, but whatever. I'm a trader. I'm a trader just like you, and I base my trend trades on fundamental analysis of macroeconomic data, aka that's what QuantBox automates for us. If you're watching this on YouTube, you're watching it hours and hours late. Right now it's 6:30 on the dot on Wall Street, 3 hours before the market opens, and we're already taking a look at the deep dive into the details. If you like that, why don't you try QuantBox? It's really pretty, and you can do a test drive for only $8. I'm telling you, you're going to fall in love. QuantBox.co. With that being said, let's get on with it. Let me remind you that trading is risky, not appropriate for everybody. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. I got to log in. Okay. Coolio. So today is Wednesday, actually, because of all the holidays. Most of the free world took much of this week off because of Canada Day. So there you go. Let's just get into it. Let's log into Pro, switch my account to the proper account. Great. La 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 la. Boom, 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 boom. Logging into Google Cloud. Hey, it's slow because it's powerful. All right, cool. So anyways, buy yen, buy the Japanese stock market, buy yen, buy another yen pair. So it looks like, yen pairs is something that we should probably keep an eye on. You can see, looking here, let me expand this a little bit, make it easier for everybody. Take a look at here. These are the global stock markets, and going into the holiday, we had some profit taking, and now that we're into the new second half or third quarter, yeah, it's kind of flat. Okay, just kind of flat generally. Cool. So not much to do there, but it just shows you like that. Do the holidays matter? Yeah. Does the summer break matter? Yeah, it does. So we're losing some volume and volatility. I don't know if there's any massive changes here. I'm looking at retail sentiment. Retail is still heavily long euro pound, and they're heavily not long, aka short short the ends. That can't be really. Maybe they're just not on the right one. Let's do a deeper dive into oh, wrong one, sorry. Let this load. So we know what we want, and QuantBox was very quick to point out. Long the yens have been the play. What's happening today is our current question as traders. Everything seems pretty close to this flat line, and that literally means the market's flat. Oil is way up. Okay, there's an outlier. Remove commodities, remove crypto. And this gives us a better look. Our biggest loser is what? Negative a half, negative 0.6. And we have a European stock market down today. Another European stock market down today. Yeah, the Japanese stock market was down today. Now, this is related to the overnight news out of China. Disappointing numbers out of China has taken down the Japanese stock market, because we track that, and it's down a bit. And then, but it's taken down European stock markets as well. So will the Nasdaq, S&P 500, and Dow come down. Well, they're basically flat right now. Okay, like up less than 0.1% kind of thing, or actually 0.1%. So these might actually be negative today. You might want to take a look and see how that fits with our data. Take a global stock look at the global stock market indices. We can just pick on, I don't know, let's pick on the Dow. And July, August, September for the Dow can be very bearish. Let's look at the S&P 500. Okay. I was messing around with this. I don't know if you like this better. Not, but all of a sudden, right? So I didn't know this was live. Hopefully I didn't make a mistake. I was messing around with this. So June was a big month and it wasn't expected to be that big. So you can see maybe part of July is okay. And then down, down, down. You see like coming up, like think of it as a window that sometime soon, sometime in the next 90 days, there might be less up, maybe slightly down in these stock markets. See, again, the contrast, we'll look at the FTSE. Okay. You can see with the FTSE, there's a lot more seasonal pressure to the downside this time of year. And it was down, and then we had the up, and now it's kind of back around again. Okay. But notice this, there's definitely a downward pressure, huh? Let me do this Captain Obvious here. See? And then the gray is what has actually happened. Okay. So it's a little out of sync with what typically happens, but that gives you a little bit more of a sell bias, huh? So the word of caution, I think that's coming out of this is that I don't know. Be careful this week. It's a shortened week. We have non-farm payrolls at the end of the week. Don't get too excited. A lot of the adult traders are still on vacation, right? This is all the summer interns getting their shot. Can I place a trade, please, sir? Can I place a trade? Yes, okay, place a trade, right? So, anyways, don't expect too big of a volume. This is the smart money tracker. This is updated every weekend based on the commitment of traders report. We pull this out of the Commodity Futures Trading Commission. And there could be an update coming. Oh, I don't know. I can't really say. But this might change slightly in a sense of being easier to read. How about this? If I was going to announce a big change in the smart money tracker, it would be that it will become easier to read. How about that? So stay tuned. I'm not saying, I'm just saying. So anyways, S&P 500 getting long. This is new money coming into the S&P 500, new money coming into the Nasdaq. Wow, huh? And more contracts short oil. Wow, huh? So again, SPX moving. Uh, um, okay, it's people were heavily short, but now there's more longs than there used to be. And where's our oil? So SPX way down here, and oil's way over here, but now short contracts. So you see, like this SPX. Let's do it this way. The S&P 500 is kind of moving this way a little bit, not that dramatic, of course, and this is moving that way. Interesting too, because it's happening right at the first half, And what we've been preaching is Canada Day is definitely a turning point for almost all assets. So it's kind of interesting to see the weakest actually getting some bid, and a stronger asset actually being actively sold, which is kind of interesting. So we have to keep an eye on this as they're shifting. Okay, a lot of money is still going toward the U.S. dollar. Gold, still activity there. It's funny because I disagree with it, but it's what's happening. You're like, why do you disagree with it? Well, first of all, typically it's a hedge, right? And if we're in disinflationary period and the Fed is going to continue raising interest rates to drive down inflation, then why are you hedging inflation? But the second thing is Warren Buffett, who a lot of people love, he's like, it's the dumbest thing you can buy with your money. It doesn't do anything. It certainly doesn't pay you rent, and it doesn't pay you interest. So, so if you're afraid, buy the S&P 500. Sit on that for 30 years and you'll, right? Where gold won't do anything. So, anyways, don't listen to me, listen to Warren Buffett. Take a look at the calendar. We do have a meeting minutes today. Here it is. Meeting minutes. Okay. This other stuff, yeah, factory order, sure. No, but it's really meeting minutes. We're trying to figure out what the FOMC is thinking. Why did they pause? Now, I thought he was clear in my interpretation that they were doing 75, 75, 75. Then they were doing 50, 50, 50. Then they did 25, 25, 25. And now I think it's going to be pause, 25, right? Like basically doing a half a rate hike every meeting and stuff. But whatever, we don't know that. I thought that's what he explained back at that time, but nobody in the media seems to think that, so they're still guessing, right? I'm like, I thought that's what he said, but anyways, nonetheless, this is going to be the important mover. Okay, and then anything going on by the end of the week? Any news that we should pay attention to? Well, we have ADP coming up. Of course, jobless claims. Okay, CAD news and stuff. I'm just kind of looking at the U.S. news, ISM services, and NFP. Yep. So it's a very short week, but there's some still pretty big news out there, right? If you're doing calculations on the employment, so like if you're saying the next thing to watch besides inflation, like inflation's definitely fallen. So the next thing is the job market and wages, right? You might be tracking, yes, non-farm payrolls, of course, initial jobless claims, of course, but you might be tracking jolts, which tells you how many jobs are actually being advertised. And we've gone from a 10 handle to below that. And so less and less companies are, well, there's less and less jobs being advertised, which shows you sort of how many jobs are available per worker that's not working. And there are plenty of jobs, but a lot of these are phantom jobs. They're like, hey, if you happen to know artificial intelligence, machine learning, you happen to have a PhD in mathematics, and you don't have a job and you'd like to work for us, like, hey, why don't you swing on by, right? But of course, that person doesn't exist. So they're kind of phantom jobs. So we'll see if they start cutting back on that. But that's kind of the next thing that economists are kind of watching. is how many of these jobs, because they'll do a model where they're like, how many jobs and how many available and what's the size of the workforce, and they're doing numbers like, and they're calling that like a gap, the gap between people looking for work and how many jobs are available. But to me, most of those jobs are probably phantom. Right. I think what we're seeing, and that is companies spent so much money during COVID to get workers that they're just going to hoard the workers now. And that means wages are not going to come down fast unless you used to work at supercuts. Okay. So the longer term stuff that seemed to be out there were yens. Okay. And we're way at the top of this range. Okay. We're hitting tops. So this is um, a daily on CAD yen. And the thing is, the psychology of this trade. So I'm in way down here, um, kicking off the old 21. But what you don't see is what we've already discussed, even weeks ago, discussed. Lovingly, we say Canada Day is the most important day of the year. And very often, things that were going up stop going up right on that vertical line, right on Canada Day. That just, we call that seasonality, of course. And it's kind of interesting that we're hitting a top exactly that day. And suddenly we have a bearish engulfing candle. Looks like I'm going to get knocked out for profit. I don't know how many pips that is. I'm in at what, 106 something. We're at 108 something. So 200 pips or something. I don't know. So looks like I'm going to get knocked out because technically, let me get an arrow now. This would probably come down to the 21 and then maybe like this, right? But because we use QuantBox and we know some seasonality, we also know that more than ever before, like more than any time in June or May. Okay, that's the difference. More than May, more than June. Now there's more of a likelihood of a significant correction relative to the previous rally. Like I don't mean the end of the world zombie apocalypse, but we just hit a massive double top on Canada Day and stopped going up. And so if all we knew was simple technical analysis, you would just assume the pink. Okay, just another move to the 21. And that actually might be the case. But the thing is, because we have a little more data looking back 20 years, this is more likely than before. That's all. So I don't know if that's going to happen, but the probabilities have increased based on 20 years of research. Good to know, right? Yeah, yeah. So I wouldn't look to sell, but actually I just got knocked out. Right? Look, I didn't look to sell, but I sold as a bull. I took my money and ran. Very nice. Okay. Now, if I didn't know that, I'm facing the opportunity cost. Assuming my stop would have been at break even, I would have lost 200 pips of money already, right in the bank, kind of thing. So that's good. That's good. That's risk management. And now I know to take this quite seriously, huh? Okay. Yeah. 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 Oh. So we'll see what happens next. Maybe this is an unusual year because of what's happening at the Fed and the stock market rallies, anyways. And then I'll probably buy some CAD yen. Hmm. Okay. Or this is all randomness, and this has more to do with a big strike going to happen in Canada, and Canada's not going to export as much coal and nickel and uranium due to a strike. What was that, 80? Yeah, something like that. But then we look across the board and you're like, I don't know. Maybe it's not related to Canada. Maybe this is more related to seasonality of when yen pairs just kind of stop going up. So we want to look at that. And here's Aussie. Okay. You're like, okay. See how we're, let me clarify this because there's a lot of lines on the chart. Oops. Okay. We were inside of this. Okay. That's a channel. And then we're outside of it. So now the slope of that channel is changing. And so I have this in red now. And now what if we break that channel and start doing something like this? Okay. We call that an old man easing into a hot bath. That's a slow reversal. Hmm? Cool. Once again, that would fit our seasonal models. Okay. So you might be looking at, what is this? This isn't a weekly R1. So the bottom right now would be weekly S1 and then roll into NFP. But notice that it's not just one yen, it's all yens. Has anything economically changed? Remember, QuantBox uses economics. Has anything economically changed? No. So you're like, well, QuantBox says, yen pairs up. Yeah, based on economic comparisons. Yeah, it's true. Maybe not this month, maybe not next month, but when you're comparing the two, yeah. So now that's why you look at seasonality to say, let's say the US economy is doing better than the Japanese economy. You're like, yeah, yeah. But could that happen? Yeah. And part of that could just be what QuantBox is also telling you, that this time of year at a price just like that, it's a good time to maybe take your profit and go on vacation. Why? Because that's what everyone else is doing. Remember, if you're trying to outsmart the market, you're not playing the right game. What are we trying to do? We're trying to figure out the market. There's a big difference. So if the market's walking away, maybe you don't buy dips. You see? Why? Because no one else is going to buy because you're the only buyer. Everyone else is on vacation. Uh-huh. Showing off their bikini bods. All right. So yeah, so we have to pay attention. It looks like maybe, right? Maybe let's put this out on a higher time frame. Here's a 4 hour, different chart setup, but we're looking for the same thing where you're like, wouldn't it be interesting somewhere in this period, this breaches this way? Once again, if you were using seasonality, you might have been able to sit up here and wait for it and say, "Oh, I wonder, maybe if I wonder like double top. I wonder if it'll double top. I wonder if it'll make a double top lower low. I wonder if it'll make a double top lower low, lower high. And if so, what would you do?" Okay? Okay, this was a big up mover for quite some time. Okay. And does it look the same now? If we were just doing technical analysis, okay, up, down, buy, up, down, buy, you would assume it. That's why I drew it. And then we've run out of time. So to draw the vertical line again, let me put that back. One assumption is somewhere around here, a top will form, regardless of how bullish it was. It's amazingly bullish. Okay. But nonetheless, somewhere around that time, 20 years of research shows that somewhere around now, yen can go from weak to not weak, maybe even strong. So you're right, this is sort of the anticipation. You're like, it's not surprising now that it ranges. And then the big thing is, what are you going to do next if it makes lower lows and lower highs? Well, using your technical analysis, you might be doing things like saying, well, this is a bearish price, right? Using pivot points. That's the best bearish price you could hope for. Ooh, puts it in a whole different context, doesn't it? So typically, if you're using technical analysis in a pivot point strategy, you would look at that and say, that is a very bearish price. And if that holds, then the target is actually off the screen here. Okay, because that's an M3. So M3, typically the target goes to M1. M1, that's S1. We got to go down here. There we go. So the pattern looks like this. This could develop. Okay, and that would be your target, buck 52. Okay, so the message here is you look at the seasonality, and seasonality is a big window. I'm not talking about what's going to happen tomorrow. I'm talking about what usually happens this time of year. It could be weeks, these windows of time. But nonetheless, this is why you use it in conjunction with technical analysis. If you believed tops typically form around this time, then if you see a top, you're more likely to believe it. And when you're at a top, you should be thinking about taking profit, not just starting a new trading thing. So in this case, I just took my last round of profit. You saw it actually happen in real time, which is kind of cool. So I know to jam my stop and take a walk. Okay, great. And then when we look at technical analysis now, you might look at it through a completely different lens of no longer as bullish as it has been. Suddenly you're like, there's real potential of a real reversal. We don't know if it'll happen. In fact, bulls are likely to buy it down here because that's what bulls do. But nonetheless, to take our current kind of change in direction seriously. And that's because you use QuantBox, and QuantBox uses 20 years of data to say, hey, this might be important. Okay. But it's a confusing week. There's not a lot of people trading. So this could just fizzle out, but it doesn't change the reality of seasonality. Okay, that is what it is. We have news today. We have news tomorrow. We have news Friday. So it's a short week, low volume, low volatility, but some important stuff. So thanks for being part of the QuantBox community. And that's it for today. I will see you later.